In today's video, what I wanted to talk to you about is a small problem now, but I can see a serious problem which is growing in the Australian financial planning industry. And that is, if you are going out and thinking that you want to get financial advice, there's nothing wrong with that, but I just wanted to make you aware of a few things. I don't want this to be a rant video. So I'm going to discuss the issues that happened before the Royal Commission, the things that I can see happening right now, and finally ending on what you should be doing as someone who is educating themselves on investing. What I'd like to do is start with a little bit of a story. So a couple of years ago, a family member came to me and said, I'm retiring and I would love you to have a look at what my financial planner has suggested. So as always, I never gave any form of financial advice, but I had a look through all of the different investments which the advisor had suggested. But as I started to read the PDSs, the product disclosure statements of each of these products, effectively there was a sliding scale of fees. What that meant is, say for example you invested $100,000, you pay 2%, and at $200,000 you pay 1.5%, and at $300,000 you pay 1%. What this advisor was doing was making sure that the amounts that they had in each of these products was just under the threshold for the lower fee. Meaning that the commission which the advisor was getting was artificially higher, because instead of investing in 2 of those products at a lower rate, they were investing in 4 of those products at a higher rate. This to me is absolutely criminal, and my advice to the family member was to get a second opinion. The Banking Royal Commission also happened, and guess what? That Big 4 bank refunded the fees from that advisor. Ironically, I'm making a video on financial planning, but I am not giving you any form of financial advice. And by going past this point in the video, you agree to be bound by the disclaimer, which is linked in the description section of the video. So not only is financial planning conflicted, the actual advice to most Australians is fairly boilerplate. Spend less than you earn, and with that free cash flow, pay down any high interest debt, start creating an emergency savings, pay off your house, and with any money aside, you contribute that to your superannuation in excess of what your employer already is contributing to your super. On any windfalls, you might carry forward contributions to your superannuation fund to keep most of your assets inside a tax-sheltered environment. Then you diversify your superannuation into a lot of small chunks and basically put this into low-cost passive products. The other thing is getting your estate planning in order. Also, while doing this, the financial advisor may recommend you buy income protection, TPD, or trauma insurance. And funnily enough, insurance is one of the most profitable areas of a financial planning book. The insurance commissions that financial planners get paid can be upwards of 110% of the first year's premiums plus a trail on top. What product actually pays you 110% of what it's worth in the first year and a trail thereafter? It's absolutely crazy. Other thing which you get from this service is a big thick document called an SOA, or a statement of advice, which outlines these steps in a lot more detail. And finally, you then catch up with your financial planner once a year for counseling and rebalancing of your portfolio. If you are a little bit dubious about financial planners and you want to be more of a direct investor taking control of your own financial circumstances, hit the subscribe button, smash the like button, and throw me a comment about what got you into investing. The Royal Commission uncovered that the financial planning industry had a focus on sales. The best way to sell any service-based industry like financial planning is have a solution seeking a problem. And what I mean by that is make it super complex, make it hard to understand. Then the customer is more inclined or happy to pay you for the simple solution which you provide. So then we move on to the issue with how the industry is actually licensed. And I want to draw some context for this. So let's think about other professions, lawyers, accountants, doctors, people that have professions. The way that industry is licensed is they educate themselves, they then apply and obtain a license after a couple of years of practice, and then that license sticks with them. If they do something wrong, they lose their profession, which they have trained up to become. So the burden of making sure they provide good advice sits with them. With financial planners, what actually happens is the financial service license holder owns a license, and the people that you talk to, the financial planner, sit under that licensee, meaning that the punishment for the person doing the wrongdoing is actually indirect through their AFSL license holder. That AFSL licensee often has a platform, and that platform pays a commission to somebody, whether it be them or the financial planner. Meaning that the financial planner can't recommend every single product in Australia. For insurance and compliance and all other reasons, they can only recommend products which sit within their platform. The final issue is around this culture of mediocrity of investment returns. There is a narrative around that you should have low cost financial products, you should have passive ETFs. All these things basically mean that you get market returns less the cost of their fees. If you're going to pay someone to give you advice that doesn't add any value in what you already know, it's probably not worth paying that fee. This is all stuff which is working through the system from the past, but let's talk about the current structural changes. The financial planning industry is at a divergence. It can go one of two ways. Firstly, what it needs is a complete structural redesign. Basically, the industry breaks down in its current form, then at some point a new equilibrium is hit and the industry is rebuilt in a way that is much better for its customers. The second direction, which is more concerning, is rent-seeking behaviour. What is rent-seeking behaviour? Basically, you get industry lobby groups that talk to the government and say, yep, we agree, we need more regulation, we need more rules, we need more laws, we need more paperwork. And this creates an artificial barrier to entry, which limits new people coming into the industry to fix the existing problems which are in place. You might not want a lot of financial planning. You just might want a simple question answered. And for this reason, I can see these following problems emerging. Firstly, there is a massive exodus of financial planners. For every one that comes in, there is dozens and dozens that leave the industry. We should be encouraging competition within the industry and simply getting rid of the bad financial planners within that pool. Due to financial planning insurances and regulations, they need to do a detailed fact find, and then they need to provide you this statement of advice. The cost of that is $3,000 to $5,000. Now, my worry is that if it's just a simple question and answer, why should consumers be paying $3,000 to $5,000 as a minimum? And statements of advice are getting longer and longer because the financial planner has to justify the cost to the customer. And providing more detail in a document means that you can hide a lot more devils within that detail. With all of this added complexity and cost, there is one area of financial planning which is currently growing, and that's called intra-fund advice. And this is crazy because the whole financial industry was about creating a profession where people would look through different financial products and then suggest to the customer which financial products are the most suitable. Now, compliance is one thing which can be easily confused with justification. And I think what the financial planning industry is experiencing is a justification issue, not a compliance issue. Compliance, in my book, is taking control of the situation, taking ownership and accountability of it, and making sure that you have the client's best interest at heart. Justification, on the other hand, is documenting what you're doing so that you have a case to protect your backside in a situation that your decisions come into question. This is not to end as a video smashing financial planning and suggesting everyone should do it themselves and financial planners are bad. Quite the opposite. Financial planning can be really helpful for some people. There are some principles which I'm just going to talk about which you should apply regardless of whether you use financial planning or not. But before I do that, what I wanted to talk about is who should seriously consider having a chat to a financial planner. Firstly, major changes in your life, whether you're considering selling a business, you've sold a business, you're having a divorce, or you've come into a windfall of cash. Speaking to a financial planner can help you around tax effective strategies to deal with this that you may miss if you try and educate yourself. The next person is someone who has a big income, say over $250,000, and you just do not have the time to educate yourself and look after your own personal finances. Finally, if you have multiple assets, trusts and companies, the administrative burden from looking after that can be quite high, and all the considerations around tax and various other affairs can get quite complicated. Whether you use a financial planner or do it yourself, that's totally up to you. But what I would encourage you to consider, regardless of which direction you take, is a couple of core principles around investing. Your personal finances are solely 100% your responsibility. Not the stockbrokers, not the financial planners, not anybody else's. It is you. A decision not to act is a decision not to take control, and that is neglecting your own personal finances. Know what you're investing in and know what the returns are. Then educate yourself. Guess what? Everybody knew nothing at the start. Everybody knew nothing at the start. Everybody knew nothing at the start. We know how to have a heartbeat and we know how to breathe, but everything else almost is learned. And by learning and continuing to learn, you will be in a better position than you were 6 months ago, 12 months ago, 2 years ago. The funny thing about education is that it creates a phenomena called blind spots. And what are blind spots? Well, when I go to a party and I talk to someone, they think they're a pretty good property investor. They think they're a pretty good stock investor. They always think they're above average. In fact, as humans, we always overrate our own ability to do things. So when you read about a strategy and you think you're onto a winner, just be mindful the fact is someone knows how to do that strategy better than you. When considering an investment, I do make decisions based on delivery, not promise. And I know a lot of PDSs do state words to the effect of past performance is not indicative of future performance. But I do genuinely believe that people who have a track record of delivery continue to deliver better than somebody who hasn't delivered before. Another principle to talk about from track record is skin in the game. And what do I mean by that? If you're investing alongside people who have cold hard cash in the deal that they can potentially lose, they have much stronger conviction in ensuring that that deal is a good opportunity for everyone involved. The final principle, which I'll end on, is to build a network of other people who share the same interests as you in investing and learn with them, not from them, with them. And the reason why I say that is it is an education process. You're learning upon learning, and also you should be mindful and be a bit suspicious if people suggest this is the way it should be done. You should always be questioning it, always learning, so learn with them. So this gives you an idea of why financial planning was broken, where the critical problems could lie for financial planning in the future, and my own personal principles with the topic of financial planning. So until you find an awesome financial planner, become a direct investor, or my next video. Good luck and goodbye.